Afternoon, how are we all doing? Friday afternoon, nearly time for a beer. I need one after this week. This thing's just driving like a lunatic this week. Crazy thing. Oh, hello. Got out a back test started. 46% drawdown for 20 grand. No thanks. Oh god, that's a big one. We'll let that run. How's everybody doing? Afternoon, Steve, Neo, Crom, Fletch, Burke, Virginia, Amy. How are we all doing? So, no movement today. A bit of a crap day. Nothing's moved. So, the only thing that is moving is the yen. Still getting hammered. So, as you can see, there's very little movement on the US dollar CAD. We have just taken out the low of yesterday. US dollar Swiss sideways. US dollar yen, big rally on the US dollar yen. We got 125 ADR, but these yens, we had the ADR hits on this morning, a lot of these. So, yeah, really disappointing day today. I was expecting a little bit more movement off the back of that news that we've had this week, but the market doesn't seem to, mind you, just seems to be waking up a little bit now with the pound, but doesn't seem to be interested in much, does it? So the pound's rallying at the moment, or trying to. The yen is weak. Everything's pushing up against the yen. Some things are pushing up against the yen. I wouldn't say everything is. But apart from the ADRs we had this morning, not really done anything, is it? Been a bit of a crap day today. I'd like to know where all this money's going, because they seem to be pulling a hell of a lot of money out of the US dollar, a hell of a lot of money out of the yen. Stock market doesn't seem to be going anywhere. So where are they putting this money? It's all being drawn out. Let's check Bitcoin. They're sticking it all in Bitcoin. Nope. So yeah, certainly not going into oil. It's very bizarre. Is that right? There you go. They just stuck it in gold in the last hour or two. That can't be right. That's an updated, is it? This platform frozen again. Yeah, that's there we go. I was going to say that ain't right. Yeah, so it's bizarre market at the moment. Really weird. So we'll wait and see what happens. We've got Michigan this afternoon. That's all we got. So 3 o'clock. The market really stuck sideways. So afternoon, Monkey, Brian, Pip from the Forge, Potgator, Steve. I'm using the Force on gold, so it will bend to my mind powers. Good job. If you can make anything bend to your mind powers at the moment, you're doing better than most. This thing is just not interested at the minute, especially this poor old yen. Starting to come down off the highs again. But after that initial rally, the yen hasn't even gone anywhere. During London, we've had the odd spike. This is the weird thing, look. You got the Canadian dollar rallying against the yen. You've got the US dollar having a bit of a rally against the yen. US dollar and CAD moving together, as you would expect. Swiss franc made a new low on the high that we got. Aussie dollar made a new low on the high we got. Euro made a new high on the previous high, as did the pound. So this isn't massive weakness in the yen, because if it was massive weakness in the yen, the others would have rallied against it as well. So it means the Australian dollar is actually weaker than the yen at the moment. It's just a very, very, very bizarre market we're in at the minute. Anyway, hopefully they'll all wake up on Monday morning and go, oh, remembered what we need to do with the fundamentals now. We should be going the other way, guys. That ain't right. Anyway, we'll see what happens. Sirij, thank you for helping me on the MAs. Yeah, good. Hopefully got them sorted. So basically those moving averages, while you're on, it's the MA ribbon filled. There's 2 of them. Yeah. So the MA ribbon filled there is 72. That one is the 432. Yeah. And then you've got the moving average in color, which is the 72 and the 24. And then you've got that one, which is the 432 and the 144. That's what controls the 4 hour and the daily. So you can see the daily moving averages on the 4 hour chart. Can everyone smash the like? And will gold down? We can certainly do that. Gold should come down. This US dollar's just stuck. We're looking at the Canadian dollar at the moment, US dollar CAD. We've got 3 minutes to the open. That's all we got today. I was expecting this to come up a lot faster than that, at least to test previous day's low, but we haven't even got that. So there's absolutely nothing in this. We might get it moving after Michigan, or in fact, Michigan might move it. So news this afternoon, we've got the University of Michigan at 3. Weller's been talking. So this is the news from this morning. Core inflation holding around 5% could necessitate a rate hike in September. That's from the ECB. So it's all if-then type stuff, which we know. Basically, if inflation holds or goes up, then we know interest rates are going up. So it's just stating the obvious, nothing new there. An error has occurred. We'll try again. That's with Waller's speech. So obviously he backfired. Nothing out of Waller of any interest. Vilroy came on and talked the same old talk. Barkins just said, I'm comfortable doing more if the data warrants it. Again, backing up the further interest rate rises for the US dollar. It's disturbing that core inflation is not moving. Will probably require some more tightening. So we have got inflation moving. What he means by the core inflation is the main driving inflation rather than the general inflation. This is a kind of, I suppose you call it a normalized figure. Same as when the ECB say rates have gone up to 4, there's actually 3 different interest rates that the ECB quote. One is interbank, one is lending, and et cetera, et cetera. So when they quote core inflation, they're talking about the specific drivers, the main drivers, rather than what we look at, which is the generalized, which is kind of the amalgamation, if you like, not the intricate detail. It's too much information in the intricate detail. That's the bit that isn't moving fast enough, which is why sometimes you see this suddenly go minus 1.8 and then it drops to minus 0.9. And then all of a sudden the next quarter, you'll get a minus 0.1 or something. It's because there's multiple things flattening that out, that inflation figure. Don't need to worry about that. That's what the analysts are doing. Right, let's quickly go and look at the indices. Market is about to open in 5 seconds. We'll have a look at the DAX in a minute. We had a lovely run on the DAX today. Missed it, unfortunately. But yeah, we had a really nice run. Market's open. Long on the Dow. This is the pre-market, obviously. Long on the Dow. Long on the NASDAQ as well, by the looks of things. I've got some, so potentially stopping out on that NASDAQ straight away. I've got some new research that I'm going to do on this, or some variation testing that I'm going to do on this. This opened too close to the high. What I'm going to look at is if we open that close to the high of the pre-market 5 range, I'm going to wait for the 1 minute candle to close and then use that. Because what we're finding a lot of the time, and I'm noticing more with these whipsaws, buy stop didn't trigger it. We got triggered on the Dow though. This initial like bang, 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 you either do or don't get filled on it, and that tends to be when the whipsaw happens. So these double-ended stop outs tend to be within the first minute, right? So we're now 1 minute candle close. You can see it's a little bit more stable now. So that initial first batch of orders that goes in at the open tends to be powerful enough to double-ended whip, and then it sort of stabilizes, and then we get a new batch of orders starting to roll in. I think that's what we need to play on. So that first 1 minute, it's not too much of a problem if we are sort of down here somewhere, but it can quite often trigger both orders. If you're in the middle, it's more likely to do something like that, which is fine if it only triggers one. And I think that's going to save an awful lot of losses. So it's part of this testing that I want to roll out, basically. I want to spend a week just solidly getting some data together on this and trying to improve this ORB strategy a little bit more. Not really improve it. If you know, it's a breakout strategy. It either goes or it doesn't. But I think there's a lot of unnecessary losses, and part of improving a strategy is not making the strike rate better or anything like that. It's removing the losses from the strategy. So you're looking for filters to remove loss. If you can remove loss, you increase profitability without changing any of the variables in the strategy. So that's what I'm seeing a lot of. So I'm going to run some tests on that. I've just rebuilt another version of the EA that is more pliable. Test that. So Dow is long and stuck. NASDAQ broken short. S&P has also broken short. So we're short on the main indices, long on the Dow. DAX this morning. So we had the all-time high taken out on the DAX, which was here. We were watching this morning. If you're in this morning's live room, you know. If you weren't, it's worth watching this morning's live room because this high here is a 2011 high. Also last month's high. Also previous day's high. So this level here we tapped up into for the 5th time today. And we were cracking it. I took a short there because if it was going to go and it wasn't going to get through that level, this thing was going to collapse. They managed to finally break it. Yeah. And then they pulled back and now we've rallied. So we're up at ADR, which is what I said the target would be today, ADR. And then we would probably stall out a bit because the speed to get through that was immense. The power it took to get through that. They needed a lot of run-ups to break that level. There was a lot of limit orders sitting there. As we saw, they were triggering constantly. So this is all-time highs on the DAX. Where we go from here, nobody knows. So it looked like this morning it was going to be a false breakout. We never got a new low put in though. So we had that low, high, higher low, off. So we're stuck now and it seems to be reversing now, the DAX off those highs. A nice M pattern reversal going in. But yeah, be aware, we are out of the highs now. New highs on the DAX, not seen before. So see what the market makes of this. Dow still going. NASDAQ still going. S&P can't be bothered. So long and the short of it this morning, ended up with a $25 profit. So the EA didn't take any further trades this morning because it closed out in profit. We had one winner, one loser. And it looks like at the moment we may get a decent afternoon session, but we'll see. So NASDAQ coming down to TP. Brought that level back up. A shy of the TP, which is lovely. Thanks for that. Dow is struggling at highs as well. We'll just wait for this candle a minute and we'll see if we get that hit. So yeah, so if you're in the live room this morning, obviously I stopped out on that short, obviously. I was very, very close to breaking long on that. Again, but I didn't. I should have done, but I didn't. Didn't trust it up there. Very difficult when you're making new highs as to know what's going to happen next. So S&P's out the short side. Come on, NASDAQ. Dow coming down very hard. We'll have a look at levels on these in a sec. Just want to see if this hits TP and if this stops out and flips short. Thinking about it. Okay, TP hit on the NASDAQ. So just trailing on this. There's a very small loss if that does reverse. S&P struggling at the minute. All struggling to get down, really. So just looking at levels, 120, 175 ADR, pound yen. We'll look at all these ADRs in a minute, but obviously they're all yen because the yen's getting killed. So Dow, looking at levels on that. Obviously, Dow, we're out of the highs as well. We've got a little bit more resistance on the Dow available, but obviously this is unlike the NASDAQ, the DAX rather, we haven't got any. So there's that high there, which we're sitting at right now. Then we've got that high there, and we've got one up there, which is a spike on news. So there's multiple levels here, which could be reactive. Pound Swiss has hit ADR. This is the pound rallying rather than that yen weakness. So we've got multiple levels. This high here basically is exactly where we are now. Yeah, so they're rejecting that high. That's where they rejected yesterday. And they've rejected it again. So Dow looks like it wants to go short. So short targets on the Dow. Obviously, we've got this propulsion gap. So anywhere in there, really. ADR would be obvious stopping point, but there's absolutely no support resistance areas in that move. So that high there, which was that, pushed up resistance, support. So you could look at that as a support level, but this is a monthly high, so it's difficult to tell really. But out above new highs now. So we've got new highs on the Dow. So if this is going to run to the upside, looking at ADR, again, same as the NASDAQ this morning. S&P, similar story. We're out at all-time, well, not all-time highs, we're out at new highs. We've got a level up there. It's an old level. That's 225 ADR, but that is last stop. Then we're at all-time highs on the S&P. So if we're going long, it's all the way up there. If we're going short on this, downside target is previous day's low. Previous day's high, which is beyond ADR. So it'd be an ADR hit to the downside. NASDAQ's just rejected those highs, so that's pulled back down again. Oh, sorry, no, that did pull that down, didn't it? We TP'd on that one, didn't we? So that's rejecting the highs there. So targets to the downside, again, going to be previous day's high, which again is ADR in that propulsion gap there. So targets to the downside, basically, is ADRs. It's ADRs in both directions on every instrument at the moment. So pretty much anywhere you go is an ADR. So stopped out on the Dow, flipped short. We are struggling, though, to get anywhere. Obviously, definitely bear move, but not particularly convincing, is it? They brought that up twice now. The DAX is coming down hard, though, so they're obviously selling. There's a sector sell going on at the moment. Everything's coming down, so we might find we've got a US dollar rally underway. Doesn't look like it, does it? So we've got the pound US and euro US. All right, this is again. This is weird. This is the weird thing at the moment. This is a bit I'm struggling to get my head around. Having watched these markets for so many years, there's always confluences in movement. So when you understand how this market works, there's a limited money supply in the markets, in the FX markets, in everything, basically, in stocks. So when you get something catastrophically moving fast in one direction, that money that's being taken out of that currency or instrument has to go somewhere. That's the thing that's foxing me, and I think a lot of people at the moment, is where is it going? Because typically when you see the US dollar dropping, you see the stock market rising because they're taking money out of the US dollar to pump into stocks. Or if the stock market's not moving, they stick it in safe havens like the Swiss and the yen. the yen is coming down at the same rate as the US dollar is, at the same rate as the stock markets are. So where is this all going? Seems to be a little black hole money's disappearing into at the moment. It doesn't make any sense. And it doesn't make any sense why we're seeing so much movement on these pairs against fundamentals either. So there's a lot of weird movement going on at the minute, which is a little tricky to navigate, obviously. So market's just obviously reacting at the minute. The initial opening cash balance, typically 15 minutes in, is done. So we'll see where we go after this. This could just be a pullback for a long, obviously, on this move that we've seen on the DAX. So this doesn't necessarily mean we're going bearish. It could be that we are starting a bull run. The last USB device you connected is not working properly. Connected any? Right, so we'll come back to that in a minute because that seemed to have stalled. Just catch up on the chat. The big guys must have started their summer holidays. Need to start drinking up and hitting the buy-sell buttons. Yeah, it's not summer holidays yet. Got quite a few weeks until that pain in the backside starts. To be honest though, summer trading for position trading is actually really good because we get what we tend to find in the summer months is low liquidity. So to find liquidity, they have to move further. So you tend to get a lot of fast movement, but no real strong directional movement, which is a fantastic, obviously, situation for position trading because it's all mean reversion. So the summer months are actually good, but they are slow. So when you're trying to target 3/4 of an ADR or something, it takes a lot longer to get to 3/4 of an ADR. And what you tend to find is when you come out of the summer holidays as well, you have to be careful of this. What you'll find is during the summer months, you'll find the ADR dash getting very, very quiet. The H1 RSI dash getting very, very quiet. Then all of a sudden, it all goes explosive. And it's not the fact that everything is suddenly going way beyond its normal ranges. It's just returning to normal ranges. If you're going to have a period of usually 4 weeks, 6 weeks maybe, where the market goes quiet, your ADRs drop. Yeah. And as soon as they come back, the ADRs basically start to gain strength again. But the movement that you get obviously is well beyond what's been happening for the last 10 days. So you get massive ADR hits, but all it's actually, when you look at it, all it's doing is returning to what it was before the summer holidays. So you get a load of ADR reversals triggering, and they tend to be pretty good because the market reacts like that. It starts to move, and again, so it's a good period. Typically, historically, it's a good period. Where are we? June. Next month, basically. So we need to get ourselves out of these holes with these yens. So looking at where we are, Aussie dollar yen, ADRs. So we had the ADR reversal this morning. So there's ADR. That was your reversal alert. Straight up, ADR reversal, done. Straight into resistance. Couldn't get any simpler than that, could you? You were straight in, straight out today. CAD yen. We are still up there. So you had a reversal alert in here. It didn't really pull down deep enough, put up into a new high. So that one is still rallying. Swiss yen, that was an ADR hit there. You never got enough movement out of that. So that was 335 pips. Half an ADR on this is 61. So not enough really to get a target on that one. And that's just sat sideways. So a lot of this movement that we had, obviously, during Asia, and at the start of London, literally just gone either sideways. It's either come down and done its job, or it's stuck. We haven't had enough movement. I think the yen is fighting back, basically. So that's Swiss yen 125. Euro yen just pushed up into, and didn't quite get 175. Again, beautiful M pattern on that one. Second rally. So last couple of hours, basically, this yen pushed up again. So reversal on this one was there this morning. So obviously this is ADR here. So the first reversal you got off of ADR was there. That was your initial entry. You had a new high put in there. So there was another reversal there as well. And obviously now we've had new structures breaking, so the next one is going to be appearing there. So it's all kind of within quarter of an ADR, half an ADR of distance. Pound Swiss, so pound rallying, that's just hit ADR a minute ago. Reverse alert is going to go in on that one in a second. Pound is long, Swiss is long based on the euro. The euro doesn't seem to be having too much fun at the moment. So pound yen, again, we know all these yens absolutely off the charts. So we're 175 ADR on this, absolutely parabolic again. This yen is just getting destroyed. Totally destroyed at the minute. Can't survive anything. Pound New Zealand, just got an ADR on that one. So the New Zealand dollar's got obviously this rally back down into propulsion that we're looking for at some point. Nice profit take move on that. So any Pound New Zealand shorts you would have had on from there, you'll be out of those. New opportunities to get in on a break of that weekly high. We've got a backup weekly high there, which is roughly half an ADR from where we are at the moment. So that's a nice looking short. Should be getting some New Zealand dollar strength coming through. Mind you, we've been saying that for a while. Hasn't happened. So pound is obviously a long, so you've got to be a bit careful with the pound New Zealand because it is actually, bias on it is kind of slightly upward, possibly like that if we get this continued weakness in the New Zealand. So a bit more of a tricky reversal, that one. You can see how orderly it's been as well. Its market structure is very orderly. So you're not necessarily going to get those big profit take pullbacks because it's doing profit take push, and they're small. So by the time you get a reversal after a big rush, it's ready to put its next leg in. So just be a bit careful with Pound New Zealand. It's not the greatest entry at the moment. And US dollar yen. So this is our gauge for intervention with the yen. They've been mentioning it overnight that they're not happy with the rate. Market seems like it was trying to do something about that this morning. We've pushed up, made a new high on the day. We've got yesterday's high there, which was off of a 200 ADR move. I think it's 200 ADR, something like that. 117. No, it wasn't that high, actually. It's about 125, 150. So we had a nice reversal there. Pushed back down, filled those propulsion gaps. Just rallied. Nothing but rally today. So weak US dollar, weak yen. You can see how weak this yen is if the weak US dollar is managing to beat that. So again, good reversal opportunity on this one. However, doesn't matter which yen really you pick. It's about picking the weakest currency against the yen for a short. It's difficult to pick a weak currency at the moment because the US and the yen are the ones out there that aren't making the moves at the minute. So it is an ADR hit. I'd be more inclined to take something else short against it at the moment. Probably the Aussie yen is the best thing to short at the moment, just because this Aussie dollar rally has got to come to an end. We are 11 days now, I think, isn't it? 1, 2, 3, 4, 5, 6, 7, 8, 12 days in, solid, straight up, not one fair move, profit take, or anything on this. It's just gone crazy. So the Aussies got to have a little bit of a rest at some point. They're going to take some profit, even if it's just to put a flag break in. So if we get that intervention as they do that, this thing's going to come down very, very quick. New Zealand dollar yen is another one, obviously, which is a fairly decent potential pullback candidate. We've got resistance coming up on that as well. So we're up at highs, extended on the daily. We're extended on the 4 hour. We're extended on the hour. Oh, we were extended on the hourly this morning. It's just come back down again. So good ADR reversals there. But they're all against the yen. Obviously, don't overexpose yourself. Take one, maybe two of those. Very difficult to pick at the moment, obviously, because the yen is being crucified by everything. So let's have a quick look at what the indices are up to. So locked in shorts now. TP hit on the S&P. Profit locked in. Profit locked in. Short flip on the Dow is in profit. So if we can get TP1 hit on that, that kind of guarantees a profit this afternoon. Out the low of the Globex session for a TP. Fairly wide range on that one today. So 485 banked, 2.5 running. So see if we can get a decent flag break on this. This is what we've been lacking recently. Just a decent, like, run, flag, run, flag, run. Those are the days we want. Those are the big winners. It's the ones where we go like that. We pull back 50, 68. Pull back 50, 68, because you're always going to get stopped out on trailing stops when the market's doing that. You know, it's all going in the right direction. It's just choppy as hell. We want these big, fast days where you just get flag break, go, flag break, go. Haven't had one for a while. So, well, say for a while. Friday last week. 9 grand, didn't we? So, yeah. We have had one recently. Is there going to be a latest version of the market reversal indicator? Nope. No plans on changing it. It does what it does. Signals reversals. I've got I haven't updated that for years. There's no reason to. It's exactly what it does. It reverses, signals reversals. There's nothing to update or enhance on it. It is what it is. Yeah. There's all sorts of things you can do. I mean, you can tinker with stuff, as you know. There's a million things you can tinker with on anything, but you end up just then tinkering forever. There's nothing that's going to improve it. Basically, it signals a break in structure. That's it. So I don't know what else you can really say. Yeah, that was the last up candle before we put a new low in. So that was the last batch of buyers that got run over by the sellers. When we break the level that those buyers started to buy at last time, we should expect the buyers to rally through it. Breaking structure. How the market works. So I don't really know what you can do with it, really. Reverse. The retest is your W pattern. Completion. I don't know. What more do you want? That's what it says on the tin. I'm just trying to see this Dow get down. I've got the NASDAQ and the Dow running at the moment, so I'm a little bit not quite as well in profit because obviously I've stopped out long on the Dow. I'm in profit on the short. I've TP'd on that, and I'm in very nice profit on that, but I haven't got that bit. So I'm one trade and one open profit short because I'm not trading that. I'm only trading 2 at the time. There's no point in trading these 2 together because you're virtually all the time you're going to get the same result. So all you're doing by trading the S&P and the NASDAQ really is doubling your exposure. These 2, however, or those 2, you're going to get different movement on, different price movement a lot of the time. So we've seen many times the Dow flies that way, the DAX or the NASDAQ flies that way, or the S&P flies that way. So these 2, I think, are good to trade together. That obviously trades Frankfurt. The S&P is a bit more of a slug. So I still can't make my mind up between the 2. This is the most volatile and most fun. This is probably the safest. But who likes safety, eh? So yeah, I've got these 2 running. So I'm just keeping an eye on that because this has got a fair old way to go to TP 5R today without pulling back. I'm just watching the Dow. Right. RSIs. So there's a lot of RSI extensions. I'm not going to go through all of these. If there's any pairs in specifically you want to look at, let me know. But there's not much point in running through the yens. Yeah, you know, we know they're extended. They're all extended and embedded on the 4-hour and the hour, a lot of them. So everything you see here on the RSI dash, yen-based, we're going to cover it we've already covered it in the ADRs. Yeah. So these are all ADR hits. They are all hourly extensions. They are all 4-hourly extensions. So there's no point in running through those again. We know what's going on with those. Aussie dollar, US dollar, that has started to roll over. Another reason we've got that up on another monitor down there, which is why I was thinking we might be getting a US dollar rally, because I saw the Aussie US coming down, but it's Aussie weakness, which is good, which is what we really want, Aussie weakness. So Aussie US was extended on the 4 hour. That's finally looking like it's going to come out again. Hopefully we're going to get this move started. So if you've been in here before, you've probably heard me say this before. The end of a squeeze tends to end with a very large bull run. So when you look at a daily chart, what you tend to find when you get to the end of a squeeze is a very big candle, or quite often a big day. Reason for that is it's the market's kind of last push. So if we're in a bull rally like this, the market will get to a level where it will suddenly accelerate. The reason it accelerates is because there literally is nobody left to sell. So when your sellers start to run out, the sell orders become more sparse. So the market has to push further to get the sell orders filled, and you end up running out of steam. So you end up with a big day. Yesterday on this was probably the largest 4 hour candle we've had during that last rally. So there's a possibility this could be the rollover. So you end up with a propulsion gap at the end, and when that propulsion gap breaks, that is the market structure high. And then obviously you need to look at where are we going to pull back to, from a sort of shallow pullback if we're going to continue, to a deep pullback if we are going to pull back nicely on it. So it's looking good. However, we need that US dollar strength as well. So if you get the Aussie dollar weakening and the US dollar weakening at the same time, what you're going to end up with is something along that sort of line. And then it's a case of, if that Aussie dollar starts a second leg, you never got your pullback. So we need that US dollar strength to come. So while there's no pressure for buyers on the Aussie, we need that US dollar to really take advantage of that. At the moment, we're not getting it. We're getting the US dollar dropping. So it is starting to roll over, but there just doesn't seem to be any interest in the US dollar at all. Like I said, we've had all this bullish news. We're going to need some more tightening. We're going to put the rates up again. It's all like, hey guys, it's going to get more attractive to stick your money in the US again. Oh, the unemployment figures missed. They're just not interested in anything but negative news, it seems, at the minute. So we haven't really got anything else. We've got University of Michigan about to land in 1 minute, 30 seconds. So let's just watch the market. When UOM hits, we might get a big move. If we can get some positive University of Michigan sentiment, we might get a big rally. So I got 10 seconds. Data just disconnected on the other terminal. Bit of a gap jump on the S&P. This looks like negative 63.9 off of a forecast of 60. Positive. So it should be negative index. Just changing servers, that didn't update. Colin, that spread. So Euro's rallying against the US. So the US dollar's come down on that. Again, see what I mean? This is what we're getting at the minute. It doesn't matter how positive you are with the news and how positive the outlook for the US dollar. They just don't seem to be interested at the minute. The market just does not want to buy the US dollar. So we'll see if we get a rally off of it. Might do. So we should see Euro US dollar start to drop if the market is going to rally off the back of that. Just wait for this terminal to update. Not a lot going on, is there? This is University of Michigan as well. It is literally just a survey. So it's not actually, I mean, I don't know why they class it as red news, but we do sometimes get movement off of it. This is the thing. It's 500 people. You know, it's like a survey of 500 people. If you pick the wrong 500, you're going to get a completely different result, aren't you? So I think you have to qualify to be one of those 500. It's not just, they don't just pick people at random. Can you imagine if they went into a very poor area of America and picked all of them for the questionnaire? You get a very different result to if you went into the middle of Manhattan, wouldn't you? I.e., went into Trump Tower and asked everybody in there. They're going to give you a different opinion. So on positive news, we would expect the indexes to come under pressure, which would be very nice today. Don't seem to have an awful lot of volume in there. So we'll give that a few minutes. It is just a whipsaw by the looks of things at the minute. Spread. That's Euro US dollar, the highest liquid instrument there is. Spread on it. Criminal. Brokers. Criminals. All of them. There's a load of people with stop losses there. Have just been triggered. You see the asks jump up there. And they're going, hang on a minute. I mean, I've got anywhere near it. Now you have. Okay, so this is weakness in the US dollar. Go figure. Looks like we're going to stop out on these. If it carries on that way. Right, let's carry on with the ADRs while that's thinking about what it's going to do. So Aussie dollar, US dollar, we've just looked at. Those are yens. That's a yen. Euro, US dollar. Again, 4-hour extension at the moment. We're up at the 80 level. Hugely extended. We've just completed that propulsion gap on the Euro, US dollar. So propulsion gap broke through support, retested, finding resistance. However, strong euro, weak US at the moment means potentially we have got a little bit more upside movement on that, especially now we've got a little bit of upside movement on the University of Michigan. So we'll see basically how it goes. With the US dollar next week, I think that's all we can really do. So at the minute, the bias on this is kind of long. However, all we're seeing at the moment is weakness, basically, in both of these off the back of positive movement. The US obviously is a lot weaker at the minute, which is why we've had that big move that's just recently gone in. So everything extended to the upside. All good shorts. One short gone in on this one. First short yesterday on the hourly RSI extension. But as I say, yesterday, as I said this morning, you know, not going anywhere at the minute. So we just got big propulsion gap targets to the downside to complete. Pound CAD also extended. That's a 4-hour RSI extension. We did get an hourly extension above there, but that's just come down again. 4-hour, we asked it extended again up to the 80. So, you know, these 4 hours at the moment, up at these 80 levels, that seems to be where the market is now reacting. The 70 level seems to be a little shy at the moment because we're getting a lot of these squeezes. So might be worth adjusting the 4-hour strategy up to 80 for the minute. Problem you're going to find is if you do that now, when we get into the summer trading, you're going to find it very hard to get anywhere near an 80. So you've got to kind of adjust and adapt with the market. But that's coming down at the moment. We would expect to get some Canadian dollar strength off the back of oil, which will help this rally back down again. Whether or not the US dollar allows that, because if the US dollar weakens, it will hold the Canadian dollar back. But as long as we got that rally on oil, this could again be the end of the move and pushing back down into this previous support propulsion gap there. Pound US dollar. So again, same thing. 4-hour RSI extension, we're embedded. Hourly, we got the first entry on this one yesterday. So that was an ADR hit, RSI extension, just got embedded and stuck at the moment. US dollar, again, weak, big propulsion gap target to the downside. First entry. So we'll see how that goes. I really do hope we get some US dollar strength because it's just bizarre that we're not getting any. But anyway, we'll see. So first entry on that. Second entry will be taken up at ADR today if necessary. US dollar CAD coming down. So that's just taken the lows again. There we go. So we took the lows during the London session, just before the New York Open. And they've just taken the lows of the London session. So we'll see if that's a final sweep before the push. It did look like this morning it was looking like it wanted to go. Then it just collapsed again. So again, very, very difficult at the minute. Oil, we are rallying. We are getting there, but we are stuck still. Bear with me a sec. Whoop. So we have held that level. Need that low to break, basically, and see if we can get back down below that low. If we're going to continue this move today. It's Friday as well. Quite often you just get whipsaw. So that's all your RSIs. Oil, as I say, this is the long that we took. Well, I took, if anybody else took it, on Monday. Just about survived by the skin of our teeth from a break even on it, and rallying nicely at the moment. Not managing to make too much progress today, but only looking for 125 ADR. If we get up to if we hit ADR today, I will probably take that off and bank it because it's a very decent profit. The risk reward on this was 5R. I'm in there. That's a little bit more actually. 6R. So 3, 4. That's not right. That's 4. Those numbers are wrong. That's more like it. Yeah, I was sure it was more closer to 5R. I was going to say, we're not 5R yet. So yeah, we're at 4R at the moment on it. So yeah, just wouldn't want to try and get beyond that level. We are descending lower highs at the moment. So if you follow that down, as people will be, you're going to get all the trend line shorters hitting it there. So ADR today, if we get to ADR today, I'll probably get out and that'll be it. And then we'll see what happens with oil, but it's obviously not having a great time at the moment. But good long triple bottom bounce or quadruple bottom bounce in this case. So we'll see where that goes. I like it at the moment, but I'm holding it. Taking balls of steel. This is probably the longest hold I've had in profit on a stop loss trade for quite some time. 5 days for me is like itchy trigger finger wanting to take that profit. I'm sitting in over 5k on this and I'm like, but I'm loath to move the stop, because if I move the stop anywhere up there, that's what I'm going to get. And I think this is potentially going to get there. But I'm being brave. Not often brave. I don't often use a stop. So pulling back on the indices. Tricky, nasty day again today. Could have banked 2.5%, but looks like these are all going to pull back. US dollar, not having fun. Euro yen, 175 ADR. So that's still rallying. Swiss yen will be on the march as well. Aussie dollar yen on the march again. Yeah, yen, more yen weakness coming through. US dollar weakness as well. Again, we don't see this. This is not normal. US dollar weakening and yen weakening at the same time. If you look at the US dollar yen, you can tell which the weaker currency is at the moment, the yen. So we got weakness in the US dollar, weakness in the yen. However, the US dollar is managing to beat that. So very, very, very weird market conditions at the moment. 50% retracement on that. Potentially rejecting midline. So this could be a pullback underway. So going to stop out in profit on the NASDAQ and the S&P. Dow Jones is either going to make or break today. Once those two are finished, though, I'm done for the day. It's Friday. Crap Friday. It is a mystery to me why the US dollar is weakening. The Fed is pointing towards higher rates. Yeah. We're getting strong data and the US dollar is being sold. I know. Tell me about it. This is why people call fundamentals funnymentals. Because while it's mainly news traders, to be honest, because the news traders always get confused. You get a green number and it collapses and they're like, but I hit the long button because it was green. What they don't realize is the market has got nothing to do. That candle for that hour has got nothing to do with the news release whatsoever. They are just eating your volatility and your liquidity so that they can take it where they want to go in line with the news. But fundamentals long term, i.e. anything longer than a few hours either side of the news, you should start to get that movement. But it's been prevalent for the last couple of months where the US dollar has just reacted twice as hard on negative news than it has on positive. So what you tend to find is there's always a delayed reaction. The analysts need to absorb that data, rescorecard the currency, look at the future fundamental forecasts, and then go, right, buy it. And then the teams kick in and they start buying it. We're just not seeing that at the moment. We're also seeing an uncharacteristically weak yen and this has been happening again for the last 6 months or so. We've seen multiple interventions by the Japanese in the yen. We usually get one a year. This is getting on for like probably number 4 within 12 months. So, you know, this market is not normal at the moment. So you've got to be very, very, very careful. I think you need to look at taking the A+ trades. So, you know, when you're looking at trading with the EA, it's a case of the ones you want to be concentrating on are, you get an alert, you look at it and go, that's extended above the hourly. Yeah, it's in the middle of nowhere, sky high. Where's it going to stop? No idea. Probably not a good idea to trade it. Then when you look at something else and you're like, okay, we've got an RSI extension down here and it's close to a previous support, that's probably a decent one because at least you've got half a chance of them stepping in with the RSI at the moment. So, but obviously this is all hindsight. You don't know this until you've got this type of market action happening. But you never know when it's going to continue and how long it's going to continue for either. It's just, you know, it's one of those situations you very rarely get multiple squeezes on multiple currencies at the same time. And there's usually a fundamental reason for it. But there is no fundamental reason for any of this. The bias scorecard is flat across the board. There is nothing out there at the moment that has a huge fundamental advantage over anything else. There's no cop positioning hideously extended in one direction on any currency. There's, you know, the market is just not positioned with a favorite. You know, we've had the US dollar being the favorite for years. We had the euro being the problem child for years. It was really easy. Right now, there's no advantage because everybody is just scrabbling to try and get this inflation under control. And the normal market drivers that drive the price of currency are just not applying at the minute. So it's, you know, as I've said before, we've never come. COVID hits, the stock market recovers at the fastest rate it's ever recovered in its history when all companies are producing negative returns because we're in lockdown. Yeah, you've got companies making losses and their stock price is going up. Why do you think we're in a bear market? Yeah, this had to be undone. This was totally wrong. These overvalued, massively overvalued these companies. And obviously then when we came out of the lockdowns, all of the companies and the tech stocks who had kept the market high, i.e. your work from home companies like, any work from home companies, all the home fitness companies, all your TV streaming companies, absolutely killed it. Anything to do with IT, anything to do with manufacturing IT components, computers. We were paying like $700 for GPUs. Used to be $200, $300, but we didn't have any because everything was in lockdown. We couldn't produce gold. We couldn't mine anything that went into the components. Yet the stock prices kept going up. So we've never had a drop like this in the stock market. We've never had a bear volatile sustained for a year. We're coming into something we've never been into before. Stock market rally during interest rate rises. Just, everything we're seeing unfolding because of COVID right now is unwarranted, is just, we haven't seen it. So I think there's a lot of confusion everywhere, and especially at the moment, because we're just not able to get any movement in any direction on anything that is logical. New Zealand dollar rate increase collapsed for days, absolutely collapsed for days. This was the New Zealand dollar getting an interest rate pump. There's nothing that would go that way. It would always go that way. And if it did go that way, it would be an A-shaped recovery and a continuation, not that. And then you get the Australian dollar rate. This is the prime example. Then you get the Australian dollar rate getting exactly the same result as the New Zealand dollar, and that pumps. Ludicrous. There's just no reason for it. World's gone nuts. Is there going to be a latest version? Oh, you already answered that one. So mystery to me why the US dollar is weakening. I've answered that one. What about the Germany 30 gap up? What about the Germany 30 gap up? Where's that? Oh, the DAX. Sorry, the DAX gap. Yeah. Yeah, that's still there. Still there. Still a short. Can't see it. I'm on top of it. I'll go. There's your gap. But the way this market is rallying, all these markets are rallying at the moment. Yeah, gaps get filled. They don't always get filled. Very rarely they don't get filled, but sometimes they don't. Most of them get filled within a week. This is a week. We're not there. So the 30% of them that don't get filled in a week will get filled at some point in the future, the vast majority of them. So we should be looking for a bear run maybe next week. But, nothing is guaranteed. Yeah. You tend to get 3 to 5 day pushes in the stock market. Yeah. And then you get a pullback. 3-day push, pullback, multi-day push. This is a 5-day rally into new all-time highs. So this is a very, very, very strong bull market. There's a possibility it's never going to get back to it. We could have just accumulated the highs and then rally back off of it. Look at the Dow. Yeah, I mean, we're off the back of a 6-day rally, pullback. Might not come down again, but it is there. That's why I took a short this morning. You have to look at every trade you take on a risk-reward basis. The trade that I took this morning was 20 to 1, wasn't it? There. So we hit that monthly high, which was the 2011 level. No, 2021 level, rather. That is also last month's high. That is yesterday's high, previous day's high. So we tapped it yesterday, rejected it. Tapped it this morning, rejected it. Tapped it again, rejected it. Tapped it again, rejected it. It wasn't getting through. So that was my entry. That's 20R. If that had played out, done for the next quarter, basically. That was a $20,000 trade on prop. But didn't play out. So this could be it. This M pattern reversal here could be our peak formation high before we come and fill the gap next week. Yeah, 5 days up, 5 days down. Totally on the cards. But again, it's a risk reward. You know, if you take that trade now, you're going to get more than 20R on it, aren't you? I put 20R on the risk reward calculator this morning because we didn't have it. So that's a 15R. If you put a really decent stop on this, I mean, obviously that's not the trade now, is it? But if you take a break of this low, put a stop above the current high. Yeah, take that break, stop above the high. You're looking at 10, 15, 12R, 12 grand. Doable, isn't it? But it may not happen. Judge every trade you see by its merits. I find it quite tough to keep the take profit or break even close to 1 ADR at the moment. Yeah, you will do. I feel like we have to catch the big reversal and then go with a bit more when it happens. Yeah. So basically, you look at a lot of the positions that you will likely be in, your average is going to be hard to keep above an ADR without aggressive drawdown control. With an aggressive position, obviously that's the idea. It brings it back into play. But with a lot of the positions, you're going to be well away from half an ADR, from an ADR. So this one here is basically back at break even. So this is what 1, 2, 3, 4 positions. There's the average at roughly ADR. But look at the propulsion gap. So my target is there. The reason my target is there is because of that propulsion gap. So one of two things is going to happen. They've already retested propulsion. Yeah. So the first thing is they've tested it, added to it. Likelihood is they've done the move and they're ready for a retracement. So you're either going to get a double top and they're going to add again because they want it further, in which case that's fine. Or you're going to get an accumulation and then break that high. The next stop is there. Or rather, I would say the next stop is there. That group of propulsion gaps, which is that accumulation break. Yeah. So the move started here. It sat around up there at the peak formation high. That was the initial order that went in. Accumulated, add, little accumulation, add, accumulation, add. There's no propulsion gap there because it was just traded nice and evenly. Accumulation, add, that propulsion gap filled straight away. Bang. Yeah, so you can see all the big bank orders in there. Yeah, the market's going to come back and test them. So right now, that's break even. Half an ADR target is 76, which is roughly 150 ADR. So that would be half an ADR target, which is going to return something like 0.7 to 1%. But depending, and again, this is why I keep saying it's impossible to give anybody a when do you do drawdown control? When do you do aggressive drawdown control? Where should I target? Totally up to you. Depends on your situation. If you're in multiple squeezes at the same time, you may feel I need to close this there, get out of it. Let's just get rid of some of this and concentrate on everything else because I don't want this to go into drawdown again. You might be sitting there thinking, fantastic, we're back at break even. If this pushes down into that propulsion gap and breaks that level, we're going to make an absolute fortune. So I'm looking at taking potentially a 225 off of this, which is roughly 1.5, 1.7 ADR instead of half an ADR. Why? Because of having a drawdown month. So I need to extend my profit targets to try and get some of those losses back. This is all part of portfolio management. Depending on each week, day, and month, you're going to have a different opinion on where you want to target. There's a lot of propulsion gap targets on this. We know we've had a massively strong Australian dollar, which is counter what it should have been. Yes, we've had decent rates and decent unemployment figures for the Aussie. There is no reason why it shouldn't have rallied. That's fine. The pound is also very strong. So this particular pair, you've got a strong against a strong. When this weakens, as long as this continues to rally, this thing could do 2 ADRs on the trot and be there on Monday afternoon, stroke Tuesday morning. Yeah, we're just about to hit ADR today. We only need an ADR on Monday and we're here. I can then reevaluate what's my portfolio like Monday afternoon. Right. Most of it has gone down. We're sitting in less than half of the drawdown we had on Friday. Let's just close this pound odd out now and concentrate on the rest. Everybody's going to have a different situation. This could do that. I've no idea. But you can only go on history. This is the beauty of the propulsion gap indicator. Yeah, you get to see history. 1, 2, 3, 4, 5, 6, 7, 8, 9 days. Push. Tested it, obviously, but we went 1, 2, 3, 4, 5, 6, 7, 8, 9 days. Big gap there, filled straight away. That was a V-shaped recovery. You got a big, strong push there, A-shaped recovery. That one there took 4 or 5 days to undo. This one, we're in 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 days. 9 days. We're in 9 days. It's bullish. Yeah, this is just a deep pullback. It's just been caused by a fundamental news event. So you just have to have faith. And every time you get into drawdown and you look at it and go, oh my God, it's the end of the world. Look at what happened in the past. Everybody thought it was the end of the world when they were sitting down there. Then it pushed up. They didn't quite get to target. It went back down and double bottomed. They thought it was the end of the world again. Then they sat through that for 2 weeks and thought it was still the end of the world. Then they went, phew. You've no idea what's going to happen. You just got to manage it. This is the problem. It's the opposite problem to when you use a stop loss. You just lose all the time. This is you're in drawdown all the time. This is the problem. But at the moment, we're in multiple squeeze drawdowns, which isn't fun. So, but yeah, it is tough to keep break-even ADR. But this is where aggressive drawdown control comes in. The problem with aggressive drawdown control, as you've seen with the Aussie New Zealand, is sometimes you take multiple aggressive drawdown controls and they all fail. I've lost good 6-7% on this. But I made back 10% on Wednesday. So I made it all back with aggressive drawdown control. So the problem with aggressive drawdown control is once you start aggressive drawdown control, you have to stay in it until you exit. This is why you shouldn't start it too soon. You need to start it when it's really there. So look at things like the daily. CAD yen 150 ADR again. So we're still pushing on the CAD yen. Look at the dailies. Yeah. If you're up here on the daily and you're doing aggressive drawdown control, you've got a really good shot of it coming down. Yeah, we don't get extended on the daily very often. And we don't hold extensions on the daily very often either. The market's been rallying for like 2 weeks solid. We are expecting that. We're not getting it at the moment. So if this thing's going to put the brakes on and then Monday this is going to go, oh, sorry, yeah, I forgot we should be a buy. This is going to be back down here on Tuesday. 2 ADR. That's all it is. It's 2 ADR. How often do we see a 200% ADR move? Once a week? At least once a fortnight. We've seen multiples this week, haven't we? So just envisage a 200 ADR move to the downside. You're here. You're sitting, instead of in negative 4 point whatever percent drawdown, you're sitting in plus 7% profit because you've got an aggressive drawdown control position on. And this is suddenly making you a fortune. It all unravels just as fast, actually usually much faster than it takes to get into the drawdown. Say la vie, that's the way of trading. Stopped out on the DAX, NASDAQ rather, and the S&P. Dow is about to ruin my day. So sitting in 1,000, about to take an $800 loss. So I'm going to end up net 200 on the day. If this obviously stops out, if this is a high-low pullback, then yeah, happy days. Going to make a few grand, but this propulsion's holding. So they've taken that one out. NASDAQ, they're trying to add. Again, US dollars dropping off the back of, again, you know, I know it's the University of Michigan. Nobody pays any attention to it much, but it is still it's positive. Should at least give us a bit of a rally. Messing around with iron beam futures. Day margins seem oddly low. Ever heard of them? Nope. I'm waiting for the punchline. There is going to be an iron beam futures. No, there's a broker called Iron Beam. There's a broker. There's no Iron Beam futures, is there? You're making it up. Although, what do they sell iron in? Beams? I don't know. Aussie dollar, US dollar goes down again. Hopefully. But, you know, look. Went down there. Happy days, we thought. 72 bounce propulsion gap target. But, I mean, this is, you know, I know the banks have got deep pockets and they can squeeze as hard as they like, but there is also we need to bank at some point aspects. Yeah, they have to take profit on these moves. They can't sustain it forever. They have to get out. So at the moment, they're just not interested, are they? They're a futures broker. Sort of reminds me of TD Ameritrade. Iron Beam. If you're going to trade futures, you don't want to get involved in mucking about with futures markets. You use a prop firm. It's just such an easy route to market. Or, you know, use something like Jigsaw. Iron ingots. It is, you're right. Iron is sold in ingots. Correct. Right, I'm going to leave it there. I'm going to get on with some more coding stuff. I'm considering taking next week off. 2 reasons. First, I'm fed up with this market. And I seem to be repeating myself and saying the same thing over and over again and waiting for something to happen. So I can do that in Telegram. Second, I really want to get some proper data done on the indices, basically on the initial opening range breakout. So I'm building an EA at the moment, which is just going to literally capture data. It's super fast, lightweight, got nothing in it, designed to whack through the strategy tester as fast as you can possibly get through it. So this has done 65 years of trading already since we've been online in 1 hour. Yeah. The ORB EA to do a year, somewhere in the region of 10 minutes or so. Yeah. So this is super fast, super lightweight, and it's going to give me loads of data. It's also exporting CSV files, which I can then analyze much more in depth, if you like. So ignore the figures. These are going to have big drawdowns because these aren't actual strategies. This is just running to get data. So, I'm doing lots of testing. So I'd kind of like to spend some time doing this. So I'll have a think over the weekend. We got bank holiday on Monday, so there's no New York market. So London market is likely to be quiet. It would be utterly irresponsible of Japan on a US bank holiday to rally the yen. But they have been known to do such things, and they've also had it done to them. So Monday is either going to be a quiet London session, or we're going to wake up to an absolute bucket load of money on all the yen shorts, if you've got any yen shorts on. So obviously, because we've got no New York session on Monday anyway, it makes sense to try and do it next week. So I'd like to get a free run. So what I might do is just have a think about it over the weekend and see how I get on over the weekend, and then I might take Monday and Tuesday and then see how I get on, and then maybe come back Wednesday. So, but I'll let you know in Telegram. So if you're not in the Telegram group, get in the Telegram group. But if you don't see a live stream come up on Monday on YouTube or whatever, then that's why. But I'll be in the Telegram group anyway. So, but I really want to get this data racked because I think there's so much more potential with the ORB strategy. It's just when you're building something sort of for commercial use, you have to make it super user friendly. that means putting tons of extra stuff in there to make it user friendly. I want to build stuff that I can muck about with in code, and it's an utter mess, but it gets the job done, gets the data done. So it takes so much more time to build it. So in the way that I can do lots of different structured testing. So S&P is holding. Oh, sorry, the Dow is holding. We're falling out that propulsion gap on the NASDAQ. 50% retracement on the S&P. That's really coming down. Just had an alert go off as well. Euro pound ADR. So that pound is really going for it today. Euro pound, that'll be a hit to the downside. There's your ADR hit, euro pound. Again, it's euro getting killed. Just not right, is it? Nothing but bullish news all week on the euro. Something's not right. There's something out of whack. Just something's going to happen in the next few weeks, and we're going to go, I don't know what it's going to be, but this is just not normal market conditions at all. This is just odd. We'll find out. Take the time. Nothing wrong with that. Yeah, no, exactly. I need a rest as well. I feel like I've been beaten up by the market for the last 2 weeks. Literally, I feel like I've been beaten up. It's just exhausting sitting through squeezes like this. It's just think at the end of it, you just want to go. So tiring. And I've got other things to do. Programming doesn't cause me any stress. And I'd also like to concentrate on doing a bit more scalping as well. So, but I'll let you know anyway on the Telegram group. So I will be back next week at some point, probably, most likely. But I'll be in the Telegram group if you need me. There's no more news. Next week's news, obviously, the other reason I kind of want to be here at the end of next week is we've got all the rate announcements as well. So Thursday onwards, we've got the Swiss and the pound. We've got CPI on the Wednesday as well. So Monday, if you look at Monday and Tuesday, there's nothing going on, literally. So nothing really should kickstart until Wednesday, unless the yen intervenes, obviously. But then there's no problem because that's just going to do that. So, yeah, next week we've got some big news figures, and it's PMI week as well. So we will have a lot of movement. So just be aware of that. There's nothing over the weekend. Monday's going to be dead as a door now, unless the yen decides to rally. And Australian monetary policy meeting minutes on Tuesday, and then no other news. So probably 2 sideways days, I would imagine, and then it all kicks off on Wednesday. So seems like the right week to do it, really. Right, that's all going the right way. So potentially going to look at a nice profit on this Dow move. So if we can get out of that low, that TP gets hit, we've got potential for a good run today. But we'll see. I'm not convinced. I'll be back next week. Have a good one. Anything you need in Telegram. Otherwise, I will see you guys soon. Have a good one.